All right. How y'all doing? Triple T here. Back to show you a strat here. Everybody been asking me if I could make a video on the inside bars, and I want to just explain why I like them. So, looking for an inside bar is basically looking for a drop base rally. And that's exactly how I look for zones on the bigger time frames. And you can also see the inside bars on those bigger time frames as well as the smaller time frames like the 15-minute. Let's see where we can see one right here. You get your drop base, enter above the high, and let it go. Stop losses below. See how fast I identified that setup? That's how easy it is. Your risk is low, and your reward is how far it gets you based on your trailing. But the potential is there. And most of the time, those inside bars for the one I just showed you, that's going to be for your that's going to be after a drop in price. That's going to be your dip buys. And you can also do the same thing for calls. I mean for puts. Let's see if we could find one. I think I have one on QQQs. 4 hour. Hey, ST, do you remember where that inside bar that I
Yeah,
went over?
it's on hourly chart.
Ah, right. Okay, thank you. Here we go. So you see the rally, base, and then you drop. Your stop loss is above the body. And as you can see, it never even tested it. And you got this huge drop. Now, if you measure your risk right there, your risk is only 60 cents. And look at this. You have the potential to make $6 in profit based on the chart. And let's say you're swinging this thing and the way you're trailing it gives you the ability to catch all of this. That's the potential to catch a $13 move, only risking 60 cent. Now, if you ask me that question again, you know the answer. Like I've noticed that I catch the top and only risk 30 cent to catch a $6 move. Like I've done this multiple times, and it's just the idea of it, and it really helps me because that's exactly how I grab my zone. So this right here, your rally base drop, this is now a supply that I'll look for. So like I'll have my level here. I'll set an alert. If price were to come back to that level, I'll look for opportunity to short it there. And that's how you would see like if I post sell the rip, that's exactly how I'll be finding them. Look for your rally base drops. All these orders that filled here, they may have some left over. As you can see, like that was a really strong drop. Like if you ask yourself, if you put your order there and it dropped here and your limit order was there, would you get filled? And that's kind of how this would react. Like when it comes back, those orders will fill and make price come down. If the buyers are strong enough, it will hold. You'll get that reaction from the sellers, and then the buyers will come back and take it over. So it doesn't have to turn around there, but it can. That's all we care about. We take low risk um, opportunities that have high probabilities of happening. All right. As you can see, if you look at the bigger time frame on QQQs, we were very overextended. So buying a dip at any point of this, it kind of would be going against you because you already know that we're in a high we're overextended. So it's gonna come back to its norm, like where we let's see if I could find one like this base here. If that broke, you don't want to look for calls anywhere below it. This base breaks, you don't want to look for calls below that. Those are the areas where we consolidated. So coming back to those levels, if it doesn't hold, we're gonna come back to the next one. The act is as magnets. So let's see. So going back to the 1 hour, knowing that this was the inside bar, but it didn't have much risk to reward based on the macro setup, like the risk to reward on the chart, I wouldn't take this inside bar here. And if I were to, look how small the risk is. You're risking 37 cent. It did push up maybe like 20 cent, which is not what I would look for. But really, it's just look at the risk you're taking. If it were to turn around, that would be a great opportunity to take it there. Now, on the contrary of that, we dropped more after dropping, let's see, from here all the way down, we dropped 13 points. Now, at that point, okay, we might be looking for a drop based rally. So, as you can see, we got another drop based out. This one actually failed, came down, broke below, and reclaimed. So, I would take this breakout, which is the type 3. If you've been following Chef's methods, your type 3 and your stop loss is still below. That's the biggest thing I like about this is you know exactly when to get in, and you know exactly where to get out. When you play breakouts and something just goes, like let's say like you're not buying the dip or you're selling the top, you kind of don't know where to get out. Cause like let's say you did play this high here, the the logical spot to stop out is the base to me. So if I'm playing this high, I don't want to risk all of this. So I'm waiting for that dip. And that's kind of how I look for plays and how I value a setup. I don't care how good the setup is, if it's going to just rocket to the moon. If it's way up here when the logical stop to me is down here, I don't want it. All right, so let's look at some other plays. I know you like Facebook ST, so let's go look at that.
Yeah.
I instantly see one here. We know that today we had some nice moves and we kind of just chilled for the rest of the day. So as you can see, we had that nice drop. We based out, broke the high. That could have been a quick scalp. Or we came down. You know, look, we still didn't stop out. So you could have bought the dip if you seen value in that. Also, we had this demand. I'm not too sure where that was from. Let's see. That's from a bigger time frame. So, but just know, like, if you have a demand around your levels, that's going to give you a higher probability of that inside bar holding, because that's just showing you a precise entry. So you got your drop, and you rally up. Oh, what just happened? Okay. You got your rally up, and there you go. Your stop loss is down here. You just trail this thing. And this is how I would trail this position. My entries here, stop loss here. So with my custom Fibonacci tool, which is based on my risk. So the size of this is projected 12 times. So when this thing hits negative 100%, that's 1 times my risk. Negative 200% is 2 times my risk. And I'll just keep trailing it. So once this goes up to 1 times, my stop loss is 0. Goes up 2 times, stop loss is 1. So I'm locking in green as that goes without the emotion. And one thing that I notice, the emotion is always going to be there. It's just about how you can control it in ways to kind of fight those emotions off. Like let's say I'm up a lot, like I went too heavy and I'm pretty emotional. This thing goes up. I'm like, oh, should I take profit or should I like I don't know if I should stay in here or not. You can look back at your Fibonacci retracement tool and you're like, okay, this is 1 times. If I come back to 0, I'm stopping out, break even. So I'm not risking anything. So, but like if it's hard though, cause like I know you're heavy and you don't want to just let it go back to 0. It's just you're risking from the profit that you have, that which is unrealized, to make more. If you ask yourself, am I willing to let this come back down for more, for it to hit type 2 times, 3 times, 4 times? If the answer is no, always take profit. It's better to just take it when you know that you should take it profit. You don't want to be in denial and be like, nope, I just want to keep holding it. You want to be true to yourself. And that's why everything I do is based on a plan and a system. It's all systematic. Like I draw my zones, drop base, rally. That's going to be the breakout is the speculation of the demand forming, and the breakout retest is the demand confirming as a demand. So I'll buy the dip after it breaks out. And of course, bigger time frames, you see the same setup, you'll have a better time and a bigger move. Like look at this one, we see another drop base rally, ensure above this body, stop loss below. Do you see any wick below this body? The answer is no, so that means you're still in the trade, you haven't been stopped out, and this thing hits straight to supply. And look what you risked. $1 to make $4.20. Now, if you ask yourself, if I take 100 trades, lose 10, are you going to be green? Of course. If you're taking 4 times your money, 5 times, you can take multiple losses and still be green off of just one win. And that's the beauty of this. The awesome part about it on the smaller time frame, because the bases are so small, you can go heavier on scalps for a very small loss and a big reward. Like let's say Amazon. I know sometimes you'd be like, oh man, this is too much risk for my account. Let's see if I can find one here. Also, these work on the 5 minute, the 1 minute. It's just based on what you see value in and what time frame you like to trade on. I personally don't like the 5 and the 1 minute. Oh, these candles are going crazy. All right, so this is your inside bar reversal for puts. You get your rally, base out, stop losses above, boom, short it. Now, if you look at your risk, you're risking about $8. I know that's a lot, but one thing I know is when that thing breaks below, it never comes back. That's a clear shot to just scalp it, and you'll that's like $28. Well, let's see. This one goes to $26, risking only about, let's see, yeah, $8 on the stop loss. Now the risk to reward is beautiful. If you don't have the account size, I definitely don't recommend taking that to risk $8. But it's just the small risk for the big reward is all I'm saying. It's like that's amazing. Being able to risk only $8 on Amazon when it has the potential to drop $100. So don't that's not financial advice to do that, but you can definitely flip your account really fast if you trade Amazon with this setup here. Hey, SD, do you remember if we went over QQQs? I think we did.
Yeah, we did. We did. Yeah,
Uber, I think did we do that?
yeah. The first one is over, I guess.
All right. Well, we definitely went over enough inside bars to get you to understand how I grab them and what I look for. ST, I know that you like this and you have a great time trading them. What can you say to everyone once you started trading these?
Yeah. So here you have a dedicated risk to reward. So when you have the market blessing, in the sense when market is pushing up, and if it is basing out, that's when these patterns play out more and give more risk to reward. So that's how I was able to tune this strategy to my trading style, and that's how I was able to just improve The way I'm looking at these tickers when they're going for the reversals.
Definitely, definitely. And it just helps so much. Like, let's say you want to buy the dip and price
Mm-hmm.
is just screaming down, and
Mm-hmm.
you're like, oh, I just want to buy it. You never know when exactly to buy that that setup. But look at this. You get your drop base, and all you have to do is enter above it. You get your nice breakout. Now, of course, this one didn't play out, but let's say another day this one actually did hold. It will just keep going, and I've seen this happen multiple times. It'll just keep going up, just based off of that strong, confident entry, and you also
Mm-hmm.
have a base. This base is where you should put your stop loss. You can use this wick also if you want to give it a little more room to go, but having your this setup form here, you no longer have to risk the whole zone, or like let's say you had a wider stop below. You now know that okay, if this body holds, we can continue. That there just right there just helps um, bring in that confidence to take that trade and just decrease the risk altogether. To be honest.
Yeah, you don't want to take it 45 and expect it to go to 47, 48.
Yeah.
Uh, as they're the, I mean, whenever you're taking a trade after it had a lot of push, it's
Mm-hmm.
a kind of high risky trade. But when you're trading like inside strategies that you're teaching here will make you think you're risking less. Like 1 hour to 4 hour is always a nice trade, which I will take most of the time, even though I get six losses, and if I get only 4 wins.
Mm-hmm.
But even though so since my risk to reward is 4 times, those 6 losses will not discourage me because they're just 50 cents, 60 cents stop loss, which I can take, and the contract doesn't go broke. It just goes only 10% or 15%, not more than that. But you're getting 50%, 60% on the contract. So
Exactly.
uh, it's better to buy the dip than buy the rip because the IV increases and everything makes the contract expensive. When you're grabbing this inside strat, the contract is not pumped and everything is at normal IV level. And even though the stock drops, you're not going to lose much on the contract. If you're
Exactly.
taking it at the rip, the IV is up and the risk is high. And even though the stock pulls back a bit and comes back at the same level, since you have the high IV, the contract is gonna lose. The contract will be still 10 to 20% negative. So when you are taking the same contract when it is at the dip, that's when the real fun starts, where the contract, even though it pushes up and comes back, sometimes the contract will be neutral. So that's the fun and good part when you're buying this inside strat, and that I have observed in most of the tickers that I have traded using this strategy.
Thank you. Thank you. One thing I want to
Mhm.
add is this is very important. I'm not going on the charts and just look. Oh, there's an inside bar. Let me grab it. It's gonna be on the ticker that I've set up. I grabbed all my zones. It's gonna be that confirmation to buy the dip or to sell the rip when I'm not feeling confident, or let's say it played out already and I'm just looking for the next best opportunity. If I see that inside bar around my levels, I'm taking it 100% with confidence. It's just that confidence thing. It's all about the psychology of it. And that's what I base my trading all around. I do everything to avoid being subjective and biased and be objective as possible based on the system that I've wrote down and built over the amount of time I've been trading. So right here, you see that this was a rally base and then it actually dropped, right? Now, of course, this is a good inside bar to play, but look at the trend we're in. We're definitely bullish here. So in this case, I don't see that being a good inside bar to short it because most of the energy is going against you. All of this uptrend, all these buyers, every time you see a drop, there's some buyers trying to buy in. So where this would be a great entry is if this was a downtrend where we're getting drop base drop base drops, and it all of a sudden rallies up, then bases out, that's gonna be your stronger sell to rip. Well, your inside bar play because most of the energy is on your side. It's a downtrend. Like let's see if I can find one in this right here. I don't see one too much. Right here. Perfect. Perfect example. You get your rally base and then drop. And as you can see, where are we? We're still in that downtrend. We're slowly turning to be in an uptrend, but look, you can tell once we broke it, that's where we started to change trend. Even this one we rallied, came back. You got your inside bar right there. That definitely looks like you would stop out. So I wouldn't actually call that a win. But definitely, like you see the point. You want to trade with the trend and make sure you know what's going against you. Like let's say if you trade on the 15 minute, well, you want to know what's going on the 1 hour. Are you trading in that trend or are you going against it? So when you're going against a bigger time frame, you want to scalp it. You don't want to hold it to its max potential. But let's say you're in a 4 hour uptrend, the 1 hour's in an uptrend, and you grab your inside bar in an uptrend on the 15. Of course, hold that because all those other time frames are going in the same direction, and all you're doing is using the smaller time frame to get a more precise entry. Like we're getting some pullbacks in the market, but look at this. You get your drop, base, confident entry, small stop loss, and this thing could keep going up in an uptrend in a green market, of course. Anything you want to add on, ST?
No, I think you added the part which I was about to say. You just have to look at the overall market sentiment when you're trading the inside strat. You don't want to go against the market. If the market is deep red, you just have to wait for it. You need not just right jump on it.
Exactly, exactly. And that's it. Look, definitely DM me or ST. Also, Gnarly has been trading the same system. Another person, Matt loves the inside bars, and a few other people. Definitely, they're liking the inside bars. So you can either tag us on the main chat or just DM us, and we'll definitely get to you and answer your questions. All right. Thanks for listening and watching, and hope that you can use this strategy to help you or just take the small little things that I've said that helps me, manage emotions and things like that. That's the most important thing. It's not the strat. Any strat really works. It's just how you're able to have confidence with it and be consistent. All right. Thank you.